Hey everyone, and welcome. So, today we're going to tackle one of the biggest, most intimidating hurdles out there, investing for the very first time. We're going to walk through the common mistakes that trip up almost every new investor, and more importantly, show you how to flip those pitfalls into a clear path for success. All right, so you're ready to jump in, right? You've seen the potential, you're excited to finally make your money start working for you. And you should be. That ambition is exactly where the journey to building real, long-term wealth begins. But here's the thing, we gotta be real about it. That journey, it's kind of filled with hidden traps. These are simple mistakes that can be super costly. But the good news is, they're almost entirely avoidable, if you know what to look for. And that's exactly what we're gonna break down today. Okay, let's dive right in with our first major challenge. I'm calling it the psychology trap. See, before you ever pick a single stock or a fund, the most important battle you're going to fight is the one happening right inside your own head. And you know the biggest enemy here? It's FOMO, the fear of missing out. You see it all the time, right? A stock is skyrocketing on social media, your friends are all talking about some crypto that's going to the moon, and you feel this intense pressure, this anxiety to jump in before you miss out. Let me tell you, that feeling is a one-way ticket to making impulsive and often really bad decisions. This quote from the legendary investor Benjamin Graham it hits the nail on the head. The market's going to do what the market's going to do. It's unpredictable, but your reaction to it, that is what truly determines your success. Honestly, mastering your own emotions is way, way more important than trying to master some complex market analysis, especially when you're just getting your feet wet. So look at it this way. You've got two paths you can take. Over on one side, you have emotional trading. This is all about chasing the latest hype, panic selling the moment things dip. It's just a high-stress, gut-wrenching roller coaster. Then, on the other side, you have disciplined investing. This is about following a plan, staying the course even when things get rocky, and just being calm and patient. Yeah, I think you know which path actually builds wealth over time. And you know, that leads us perfectly into our next big mistake, what I call the strategy void. Because letting your emotions drive your decisions without a plan, that's like setting off on a cross-country road trip without a map or a GPS. You're pretty much guaranteed to get lost. I know this sounds super basic, but it's the most common strategic mistake people make. You gotta ask yourself, what are you even investing for? A retirement in 30 years? A down payment on a house in 5? Your goal is what dictates your strategy. Just throwing money at some hot stock you heard about isn't a plan. Let's be honest, it's just gambling. A huge part of any good plan is something called diversification. You've heard the old saying, right? Don't put all your eggs in one basket. That's all this is. By spreading your money across different kinds of assets, like some US stocks, some international ones, some bonds, you lower your overall risk. So if one part of the market is having a bad year, another part might be doing great, which really helps to smooth out the ride. Okay, another massive strategic blunder is trying to time the market. This is when people try to perfectly buy low and sell high. But look, nobody has a crystal ball. It's pretty much impossible to do this consistently. A far, far more powerful strategy is just consistent investing. It's often called dollar cost averaging. All it means is you invest a set amount of money regularly, like every 2 weeks. When you do that, you automatically buy more shares when prices are low and fewer when they're high. It takes all the guesswork out of it, it's disciplined, and it just plain works. All right, so you've got your emotions in check, you have a solid strategy in place. Awesome. Now we need to talk about the tiny little details that can have a massive impact, the fine print fumbles. These are the hidden costs that can just quietly bleed your account dry over time. You see, pretty much every investment fund out there charges fees, usually as something called an expense ratio. You might see a fee of, say, 1% and think, what's 1%? That's tiny. But here's the kicker. That magical force of compounding, it works on fees too. It works in reverse. Over decades, that seemingly small cost can eat away a shocking amount of your money. So what does that really look like in dollars and cents? You won't believe this. Over a 30-year investing career, a tiny 1% difference in fees can cost you over $100,000 in lost growth. I mean, think about that. That's a down payment on a house. That's college tuition. Poof, gone. The takeaway here is so simple. You have to pay attention to fees. And this last fumble, it's a great rule of thumb that really ties everything together. If you can't explain what you're investing in, like what the company actually does or how the funds works, in one simple sentence, then you probably shouldn't be putting your hard-earned money into it. Simple as that. Blindly following a hot tip without doing your homework is just a recipe for disaster. Okay, so we've talked a lot about the don'ts. Let's get to the fun part, the do's. We're going to turn all this knowledge into a guide you can actually use. This is your smart investing playbook. This is the clear path to success. When it's all said and done, it really comes down to this simple but incredibly powerful playbook. First up, you gotta have a plan based on your goals. Second, diversify your bets so you're not putting all your eggs in one basket. Third, think long term. We're talking decades here, not days. And finally, and this is the big one, the foundation for all of it, control your emotions. Don't let FOMO or panic decide your financial future. Look, if you take away just one thing today, please let it be this. You are not trying to get rich overnight. This is about patiently and consistently building wealth over a lifetime. There are absolutely going to be ups and downs, but the long-term trend of the market has always been up. So listen, the question isn't if you'll make a mistake, we all do. The real question is, are you gonna be prepared for the journey? You now have the playbook to avoid the biggest, costliest traps out there. Your financial future really is a marathon. So, are you ready to start training?